All right, let's dive straight in. In today's market, information just flies at you, doesn't it?
It really does, from all angles.
Exactly. So our goal here is to cut through that noise. Today, we're taking a specific article, one from the Economic Times, and really pulling out the core insights on a major stock.
Yeah, making sense of it quickly.
So you're properly informed, but without, drowning in data.
And what's interesting here is how quickly these market signals can actually come together. We want to pinpoint those critical bits of info that drive investment decisions.
Distill it right down.
Mm-hmm.
Okay, so the stock we're putting under the microscope today, UltraTech Cements. A big player, obviously, in the Indian cement sector.
Absolutely a key name.
And we're looking at this piece from the Economic Times, published July 26, 2025, though the actual data point they're focusing on is from July 15th.
Right, the timing matters.
It does. And the article flags UltraTech hitting a fresh record high back in July. So the big question for us, and really for you listening, is what are the experts actually saying? Is it like time to cash in, book profit?
Or is there still room to run? Maybe even buying a dip.
Exactly. That's the core question we want to explore. The article kicks off pointing straight to UltraTech's, positive momentum.
Mm-hmm.
It notes it hit a fresh record high in July 2025 and was already on an upward trajectory since June 2025. So, when a stock makes that kind of move, hits a record high after climbing, what's typically going on under the hood, technically speaking?
Well, the article gives us a pretty clear technical clue. It highlights that UltraTech Cement decisively moved past its 200-day moving average, the 200 DMA, back in June.
Okay, the 200 DMA, and that's a common one.
It is a key long-term indicator. But what's really significant here, as the article points out, isn't just crossing it. It's that it apparently bounced back after consolidating around the 200 DMA.
Right, consolidating, meaning it sort of paused there.
Exactly. For anyone looking at charts, consolidating means the price action tightened up, it traded sideways for a bit, finding its footing right around that important average. It's like it was gathering strength.
Okay.
And then to bounce back from that level, to push higher again with renewed energy, that's often seen as a very bullish sign.
Bullish because?
Because it typically indicates strong underlying support, maybe big institutions stepping in, and it confirms that the upward trend is likely quite robust. It suggests the market is saying, yep, this momentum is real.
Makes sense. It's not just a random spike.
Precisely.
But look, the article doesn't just stay in the past, right? It looks ahead. It mentions experts projecting the stock could go beyond RS 13,500 levels in the next 1-2 months.
Yeah, that's a pretty specific target.
It is a bold call. So what gives these analysts that kind of confidence? What are they seeing?
Well, according to the article, their conviction seems to come from two main things, what they call strong buying momentum and positive technical indicators.
Okay, let's break that down. Strong buying momentum. What does that mean in practice? More buyers than sellers.
It's a bit more than that. It implies sustained kind of aggressive demand for the stock. You might see, for instance, higher trading volumes on the days the price goes up compared to days it goes down.
Okay.
It suggests that new money, possibly from larger investors, is consistently flowing into the stock, pushing the price up. It's not just a flicker of interest, it's sustained pressure.
Got it. And the positive technical indicators, that ties back to the 200 DMA thing we discussed?
Yes, partly. That bounce off the 200 DMA is a big one. But there could be other signals too, maybe specific chart patterns, other moving averages aligning, strength indicators, things that, when combined, paint a picture of continued upward potential.
So it's a combination of factors giving them this outlook.
Exactly. It's where the technical analysis really supports that forward-looking projection.
Okay, so let's bring it back to that headline, the core question. Book profits or buy the dip? After looking at this strong run, the technicals, the positive outlook, what's the actual recommendation from these experts for someone looking at UltraTech right now?
They're quite direct about it in the article. The recommendation is to buy the stock.
Okay, so lean into the momentum.
Seems to be the thinking. But, and this is really crucial, they don't just say buy. They include a very specific risk management piece.
Yeah.
A stop loss at RS 12,000.
Right, the stop loss. Explain that a bit. Why is that number important?
Well, a stop loss is essentially your predefined exit point if the trade goes against you. Setting it at RS 12,000 means if the stock price were to fall to that level, the position would automatically be sold to limit further losses.
So it protects your capital.
Precisely.
Yeah.
And the RS 12,000 level itself isn't arbitrary. It's likely chosen because it corresponds to a significant technical level, maybe a previous resistance level that should now act as support, or perhaps just below a recent low.
I see. So if it breaks below that level.
If it breaks below Rs 12,000, it might invalidate the bullish argument, suggesting something has changed in the trend. So it balances chasing that potential upside towards R 13,500 with a clear, defined risk limit.
That makes a lot of sense. It's a strategy, not just a tip.
Absolutely. It's about managing the risk inherent in any trade.
Okay, so just to recap this deep dive for everyone listening, UltraTech Cement showing really strong performance recently, hitting those record highs.
Backed by key technical signals like bouncing off the 200 DMA.
Right. And experts cited in the article are putting out a positive forecast, suggesting it could push beyond Rs 13,500 in the near term.
And their specific advice is to consider buying.
Buying the stock, but very importantly with that safety net, that stop loss set at RSS 12,000.
Yeah, it's quite fascinating, isn't it? How one article can give you that snapshot of current strength, a forward look, and a practical trading strategy with risk management built in.
It really highlights how dynamic this kind of market analysis is.
It does. You get performance, projection, and protection, all distilled from, what might otherwise seem like pretty dense financial news.
Absolutely. And look, as you digest this kind of expert take, here's something maybe to chew on. When you see a stock like this on a clear upward path with analysts making strong calls, what other signals, maybe broader economic trends or industry news, would you look for?
That's a great question.
Either to kind of bolster that confidence or maybe to spot a reason for a little caution that wasn't mentioned, something to think about.